Hey, good afternoon, everyone. I'm Charles Payne, and this is Making Money. You know, all of the pieces that I read coming into today have Powell coming in hawkish, and, you know, of course, this is his last chance to take a stand, old West style, right? And Jackson Hole takes some shots at Donald Trump. Of course, they said the Fed will focus on independence and rescuing the damsel in distress. We're talking Fed Governor Cook. Instead, Powell tilted his hand toward a potential rate cut in September. Now, I will say I was even more intrigued with his comments on returning to post-great financial crisis policy, folks. If you remember back then, he says the economy if it even experiences a mild downturn, the Fed was accommodative for several years. Now, of course, people hated this speech. The folks that hated this speech also, of course, have disdain for President Trump. And many of them just hate his unorthodox policies and his mannerisms. And of course, that means they hate this stock market rally. Now, listen, I get that traditional valuations, look at them right here, nuts. They appear to be off the chain. But as a stock picker, I can tell you right now that these guardrails mean if you go by these, you will never, ever have a grand slam in your portfolio. Never. This was a moment of truth, though, for this rally. As you can see, we have 5 straight days in a row coming down. You can see the S&P right off that trend line. It was either going to bounce today or go further down, right? So, of course, it was a coiled spring and it's springing higher. But there's even more impressive moves out there. Take a look at the Russell 2000. It is absolutely killing it. Remember, an accommodative Fed is the ultimate elixir for the long-ailing small-cap stocks out there. Now, there is some irony about bottom fishing in small caps, folks. I know people think they're cheap, but really, the Russell 2000 is trading at a 12-month forward PE ratio higher than the S&P 500, although it has been a monumental underperformer. Today is just really, really amazing. And I think history was made in some kind of ways. I can't put my finger on it completely, so I want to bring in Bianco Research President Jim Bianco. And Jim, you know, there was a lot of speculation Powell was going to come in guns blazing. And a lot of people were upset that he didn't. What are your thoughts on what we heard?
I think you're right that they were expecting it because of the inflation level. The inflation level in core is over 3%. That's too high. Over a third of the country is not getting 3% raises, but the prices at stores are going up 3%. And Powell admitted that inflation is going to stay a problem. But then he turned around and he said, but I'm more worried about the labor market, and that's why an adjustment or a rate cut might be possible. Now, keep in mind, this is exactly what he said a year ago, and for the exact same reason. And they cut rates, and long-term interest rates went up because inflation never abated. So I think that this is going to be the big issue right now. Is inflation going to cooperate and pull back, or are we going to see a repeat of last year where they cut rates and long-term yields and mortgages went up instead of down?
No, here's the thing, though, Jim, and for years, many people wondered where the Fed got that 2% number, right? And it was noted today that the Fed deleted the quote, the committee seeks to achieve inflation that averages 2% over time. And I'm just wondering, could we actually be at the beginning of some sort of paradigm shift for the Fed?
I think we are. You know, the Fed was doing their framework review, which they do every 5 years. They got rid of the word average in terms of their framework review, or they used to call it the average inflation targeting. And now they're going to start looking at trying to bring the inflation rate to their long run goal of 2% over, in a longer period of time. Now, keep in mind, they haven't been at 2% for 5 years. So hopefully they've got a better handle on this and that they can bring it down to that target. Yeah. Otherwise, like I said, if they don't, it's going to come out in the bond market. You're going to see much higher yields.
Even in their own work, though, like to your point, it's been 5 years and it was going to be another 2 years minimum. So this was a long-term process. You mentioned bonds. Bond yields they're down. They're down noticeably today. And so the big question, I think, is we've seen over the last few months, people have been buying bonds. Is this maybe the time to have a long duration, to own some long duration?
Well, long duration is a very aggressive bet on the fall in interest rates. And even the chart you just showed that even though they're down a lot today, they're really in the middle of the range that they've been in for the last few months. And that's because I think they're near fair value. They're not overvalued, they're not undervalued, unlike what you were talking about with the stock market. And they're, so if you're going to aggressively buy bonds, your bet is going to be in a slowing economy and falling inflation to help bring that fair value level down. So I would be a little more cautious on the long end of the curve. I do like the short end of the curve because the yield curve is not very steep, and you would have better risk reward by buying, say, inside of 5 years.
In the stock market, equal weight, small cap, Equal weight's been making a pretty good move this week, obviously getting another boost today. Again, people are looking for diversification. They don't want to step out of this market. As you can see, all that green on the screen. What do you think?
I think that that's a good idea, because what's also happened is if you look at the Mag 7, it's like a third of the S&P 500. Now, I'm as big a believer in those stocks as anybody else, but if you buy a traditional S&P 500 fund, do you really want a third of your money in those stocks? Or maybe an equal weight? You're still going to have a big weighting in those stocks, but you're going to have yourself a little bit more diversified, especially as you noted before with the Russell 2000. At least the valuations, might be a little bit better at the individual level. I understand that the index level is high. So yeah, it makes a lot of sense to start thinking about doing that kind of a move towards small cap and equal weight.
Jim, I got less than 30 seconds, my man, but I got to ask about the next Fed chair. Have you, in your mind, come up with a person, or do you, and would you be willing to share it?
Well, other than you would be my first choice. I think that the leaders are going to be, Chris Waller and Kevin Hassett. And I do think that the president is probably going to take several more weeks before he makes that decision. So I'd be surprised if we saw anything imminent on that front. He's got to deal with this Lisa Cook thing first.
Yeah, absolutely. Hey, Jim, always appreciate you, particularly on days like today. Thank you very much.
Thank you.
All right, so my next guest says that the debate